Hey everybody, it is Lorelia coming to you today to talk about the digital dollar and coin shortages. So, in case you don't know, it's been in the news. Do the research, be on point, know what's going on. Um, just recently, Forbes, not too long ago, um, posted an article about the rise of the digital dollar. And of course, in the article, they noted about a lot of things that a lot of people may not have been aware of last year during the Libra conferences. Um, or should I say, when the Libra committees went to Congress to talk about the future of digital currencies. And of course, there was mention of Facebook being a strong supporter of it and how they were coming out with their own digital currency. And so the whole conversation of cryptocurrency came up and everything. And although it all, it all has a place, but I can't stress enough, you got to keep your eye on the ball, because everything is going to be digitalized. Even, I talk a lot on this channel about credit. I talk about a lot about funding. And even with, if you think about 10 years ago, or longer than 10 years ago, 2008, they considered us in a recession, a documented recession. What birthed after 2008 was the rise of social media. That's when everybody and their mother started to use social media. And in regards to what we're talking about now, was the rise of fintech. And what is fintech? Fintech are the online, it's the online websites where you can get funding. That's your Cabbages, your Blue Vine, PayPal, or whatever. They transformed the way you do lending in regards to how normal banks did lending, because the old way of doing lending was when it was called manual underwriting. So with manual underwriting, this is the way banks did lending in the past. They actually had a human who would look over the files of the person who is seeking the funding. So you literally had to pay a human to be a loan processor, a loan reviewer, or what have you, to make sure that there were checks and balances, that the person can be approved for the loan, that the person qualified for the loan, that the person had the right documents. Well, fintech, that technology companies of Silicon Valley decided that they were going to use technology, artificial intelligence, to be able to speed up the process to get to be able to lend people money. And that gave rise to the fintech. So that's why all these companies, like, the Nav, the Cabbages, the Blue Vine, the PayPal, or what have you. That's why, if you really look at who backs them, is technology companies, because the technology companies created software, technology, artificial intelligence to speed up the process in order to give you a loan. That's why you can go on any of those sites, and by just giving them a little information, don't even have to give them a social security number, and they literally can tell you if you're going to get approved for a loan. That was birthed during the last recession. Now they say we are either going in a recession. You have some people who say we are in a recession. The economists have not really documented, but based on trends, we are in one. What is going to rise up out of that? Make no mistake about it, there is no coincidence that there are coin shortages. We know that with COVID, Mint had to lay off people, and with the layoff, they were unable to process coins. So now businesses are saying we don't have access to coins. And then, of course, along with that, you got the digital dollar. What does this all mean as I bring it all together? We are going in a real division of the poor and those who have financial resources. And when I say financial resources, of course, money is a large part of it, but awareness. A lot of people just aren't aware of what's going on. And as much as I say on this channel, how are you going to play the game if you don't know the rules? And I cannot speak enough to how people do not know the rules. They do not know the moving pieces. You still have people thinking that they're going to get access to credit, access to funding, doing tricks of the trade. Artificial intelligence is smarter than that. What you don't understand is that FICO has spent so much money with getting artificial intelligence to perform at a much higher aptitude than a human. Because what happens is, as the technology gets better, that FICO puts the money behind making sure artificial intelligence is better. That now helps the bottom line of the lenders. Because, see, a lot of people think FICO is for the consumer. Let me tell you, personal credit plays a very small part in the company of FICO and their bottom line. The majority of, hey Timmy, the majority of the profits that come from FICO, that is the scoring company that gives you a personal credit score, comes from them providing software and resources to lenders or those who are in business, and I mean big business. Hey, BR, to protect their bottom line. Lenders, like I said, they know you better than you know yourself. That's why it almost makes me feel sad for people who still think they're going to trick the system. This is not 1979. This is not even 1989. It ain't even 1999. And it definitely ain't 2009. What am I saying? I'm saying that the way the world is going, the way the economy is going, you need to have your finger on the pulse. You need to know what is really going on. And a lot of people do not know. Outside of the digital dollar and the coin shortage, on the mortgage front, stated income loans are back. Also known as non-qualified mortgages. For those who don't know, non-qualified mortgages are really another name, another package of what happened in 2008. Now, there's a bright side to it. One may say it's a bad side to it. A lot of people are going to get wealthy. Because now you have, say what you want about President 45 or whatever, but he is very business, pro-business. He lightened up the stronghold of Dodd-Frank. Once he loosened up the stronghold of Dodd-Frank that was put in place after the last recession, then that gave birth to the things I just talked about, fintech. Now in the mortgage space, we have non-QM, non-qualified mortgages that are on the scene. great opportunity if you are a business owner, because most business owners will tell you a few years ago it was hard for them to qualify for a home mortgage because a lot of them are W-2 employees. But let me just say, with non-qualified mortgages, and I know one may think I'm everywhere with this conversation, but with non-qualified mortgages, what is needed to get you qualified to get a loan is pretty much a bank statement and deposits, and to be able to prove them. So now you have business owners who can really document that, hey, I got a fiscally healthy business. I may not W-2 myself as an employee, but if you look at my deposits in my bank account, I keep good books of records. Lenders are willing to loan you money. So there's a lot of things financially that are going on. And that's why I said it's a big separation of the poor and those who are financially aware. I'm not even going to say the wealthy, because if you have the right access to information and know how to apply it, you can really create a lifestyle of you being okay, and you're not being affected by all of the hysteria, the hype of what's going on. But a lot of people don't have or don't want to be aware of the information. They truly want to believe that they can do some tricks of the trade to be able to get what it is they want. And if you fall into that trap, if you truly believe that, what's going to happen is you are going to lose out financially, because a lot of major stuff is coming down the pipeline. You know, if you could really look back 10 years ago and you look around you and you say, wow, this gave birth to that. The things that you used to can do, you can't do. I just recently got a Facebook memory that 10 years ago on this date in 2010, I finally got rid of the BlackBerry and got an iPhone. BlackBerry doesn't exist. So there are some things that didn't exist 10 years ago that in this day and time is going to be the same thing. We are going to look going forward, and we're going to say, wow, some things that didn't exist before don't exist now when we look 10 years into the future. Don't be one of those people where you're going to be financially obsolete, because that's what's going to happen. A lot of people are going to be financially obsolete if they don't get access to new information that can change their life. So, you know, like I said, on this channel, I talk a lot about credit, personal credit, business credit, you know, how to leverage that to really financially change the trajectory of your life. And so you need to be on the pulse of what's going on. Thank you, BR. So not going to make this video that long, but just wanted to point some things out. Digital dollar, coin shortage. What access to information are you not getting? So I'm going to leave it with that. I'm going to talk more about what's going on, as well as still do what it is that I do on this channel. Talk a lot about business credit, personal credit. But if you're someone who wants to really learn how you can leverage personal credit to get access to business funding and leverage it for real estate, because like I said, non-QM, there's a lot of changes in the real estate industry, a lot of changes. Reach out to me if you go to bizcredit.yourmoneymentor.com. Let's talk. Everything will be below this video, and I'll talk to you then. Bye-bye.